All right, perfect. So we're going to talk a little bit about staking and the future of staking. I'm really looking forward to this one. We can probably start with a quick round of introductions from all our panelists. From myself, I'm Mirko Schmiedel, CEO and co-founder of Staking Rewards. We are like a staking marketplace and data provider. Passing it on to you.
Cheers. Apparently I work for FX Protocol, which is cool. I don't. I'm Jordan. I work for Symbiotic. So we're a shared security framework based on Ethereum.
Hey guys, I'm Etienne. I'm the head of ecosystem for Mellow, which is a decentralized and permissionless vault infrastructure for liquid staking token and certain products.
Hey everyone, I'm Rose from StakeStone, and we're a liquid staking, restaking most liquid stone Ethereum asset on Ethereum. Yeah.
Everyone, my name is Max Einhorn. I'm a co-founder of Valence. Valence is a protocol that enables programmable interoperability across any blockchain. So you can think of, you're probably familiar with bridges or interoperability protocols. We extend that functionality to not just fire and forget, but to take programmable action across chains any way you want it.
Amazing, yeah. So when we talk about the future of staking, where we want to bring it today, I think restaking is obviously has been like kind of shaping the staking industry for a long time now, and it has been like extremely hyped in the last year, and it's still like one of the key primitives in the staking industry right now. Shared security and restaking. There's a lot of developments going on with like new protocols and new launches. Symbiotic just went live on mainnet, for example, and I think it's quite interesting to see, like, looking into the future. Are you maybe from all of you? Are you bullish or bearish on restaking? Maybe elaborate a little
bit on that. So I am bullish. I wouldn't be working here if I wasn't. I think to your point, restaking was massively hyped last year. And as with everything in this industry, things are overhyped. And we are still incredibly early in the restaking shared security space. So, Symbiotic went live in January, and it was the first and only currently feature-complete shared security system. So only in January did we actually have shared security live. And so it is going to take time for the whole ecosystem to mature. It also is going to require a bit of the restaking narrative was very much focused on yield farming. And so our job at the moment is to kind of reframe that towards, yes, there's going to be yield coming down the line, but actually it is a fantastic tool for networks to launch decentralized and safely. And so we're in the process of that narrative shift now. So yes, fundamentally bullish, but it's just going to take a bit of time for the ecosystem to take hold.
Thanks. I'll say bullish as well. Completely agreeing with what Jordan just said. I think it started as a really hot topic, but builders were not ready at the time, and I think we're just barely scratching the surface of what is actually we are capable to do with restaking underneath. And so as we move forward and we talk with more builders, we see new use cases popping up every day. And I think it's still early. We have still a year before we see new use cases, and happy to discuss them during the panel.
Yeah, so from StakeStone perspective, we work closely with Mellow and Symbiotic and EigenLayer. We work with different ABS operators to delegate our Ethereum and for restaking purposes. From the past, staking from an institutional perspective is not so widely explored, and I think with regulations coming in for institutional staking, I think that could increase a lot of the staking pool sizes. But for restaking itself, I think you need actual networks or ABSs to generate real yield for I guess yield accrual and everything. But there's a new use case for caps. I think they're doing with EigenLayer, where they use Ethereum, delegate Ethereum to secure underwrite risk for trading activities. I think that could be interesting because one of the large use case for crypto is trading and all that. So I think that could be generating some quite interesting yield for restaking.
All right, I hope you guys are ready for a hot take. I'm bearish on restaking. And here's why. So when I got Valence off the ground, it started with me going to the edge of interoperability, understand what the limits are, and once I understand those limits, let me figure out a way to commercialize it. And on my path to doing that, one of my co-founders, he ran Game of Chains, which was the Cosmos Hub's incentivized testnet. It was restaking back when it was called ICS. And when I was talking with him, I'm like, hey, it seems like protocols would be paying a lot for security, but what they actually want is liquidity. They're willing to pay for security if they're getting liquidity in return. And that's how I was able to get him and some other co-founders on board with this. So I don't think restaking's not going to be a thing. I think it's very much going to be a thing. I just think that restaking currently has things a little inverted, where they're really trying to sell this security perspective. I think what is really going to make restaking protocols really shine is when they start really putting forward a liquidity offering and making it clear what sort of liquidity a chain can get. They have often with Eigenlayer, with Symbiotic, with various restaking protocols. To a certain extent, a lot of security is a commodity. So to the extent that you can differentiate your product by saying, hey, you're not just getting the X amount of security, but you're also getting this amount of liquidity deployed to your DeFi or to your token, that is a big needle mover.
So, I mean, I think it's a very interesting point. Do you think it's feasible for restaking protocols, for example, to become, instead of shared security, maybe shared liquidity protocols in that direction?
Yeah. We're already seeing it. So the Cosmos Hub, they beat Eigenlayer and Ethereum to restaking, and so I think it's good to look there to see it get a peek into the future. The first chain that they secured was Neutron, and Neutron's paid almost nothing. They ended up doing a big grant later, but it's a whole separate thing. The second protocol, Stride, it's like, okay, hey, Cosmos Hub, I'll borrow security from you, but only if you give me a bunch of liquidity in return. And then what happened, the hub had no more customers for security, but they had 6 more customers for liquidity. It's the liquidity that they really wanted, and it's the liquidity that they're doubling down on these days. So I think this sort of peek into the future is going to happen in ETH world, where the most successful restaking protocols are going to be the ones that make it easiest and cheapest for protocols to get the maximum amount of liquidity.
Yeah, I can jump on this one because it's actually already happening on top of Symbiotic, Eigenlayer, and Mellow. We are actually working with various L2s. So on the Mellow side, we have this curated model where anyone can create their own liquid restaking token, which is very interesting because we obviously have hedge funds, node operators, and protocols launching their LRTs. But we also have L2s, which are jumping on the opportunity, creating their vault, and since it's liquid, they can actually bootstrap their DeFi ecosystem while providing economic security to the builders within their own ecosystem. So it's a win-win. They provide economic security, they attract builders, and at the same time, they bootstrap their own DeFi ecosystem.
Yeah, I mean, Barrettchain's proof of liquidity is also a flavor of this, right? So, hey, instead of just locking up your thing into security, then needing a liquid staking token and doing all that, they just go straight to proof of liquidity. Put that into the DeFi. You have skin in the game by having your assets in play in financial infrastructure that's happening on your chain. So it's already happening in a very big way.
Yeah. So, I mean, obviously, that would also be a pretty bearish take on staking overall, right? In a way that, obviously, currently right now, staking is mostly for, security purposes and blockchain validation of layer ones and so on. Do you see a future where there are more use cases for staking, where it goes beyond blockchain validation, but rather something maybe more sophisticated, for example, on the slashing side, or what do you see there, and how do you see this could go into the future?
So to be fair to staking and restaking, so I'm in touch with a very prominent blockchain right now that is thinking about leaving their restaking situation, becoming their own secured L1, and in the process of doing that, take more control of their monetary policy and still use a decentralized validator set through a staking protocol, but very proactively deploy their native asset into DeFi protocols like DEXs, lending, perps, all of that. So I think it will be a combination of the two, but I think that liquidity needs to take the forefront.
Yeah, and so just touching on the use cases outside of just blockchain security, the idea of proof of stake is, I think a lot of people just think it's only relevant to L1s, right? But actually, if you think about what actually is a proof of stake system, it is a node operator set which perform a function, and that node operator set is economically secured, right? And that kind of that framework can be applied to anything. I say anything, lots of different things. And so that's why at Symbiotic, we're not just talking to L1s, we're not just talking to L2s, we're talking to insurance companies, we're talking to DA layers. Like the number of verticals that we're speaking to is just incredibly vast. Because ultimately, wherever there is an architecture where there is a centralized entity or there is a trust assumption, that there is a role being conducted by a potentially centralized actor, that centralized actor can be removed, can be replaced with a node operator set, and have economic security backing the actions of those node operators. So it's a really powerful decentralization tool that can be applied for like that. As Etienne mentioned earlier, like the use cases are growing daily. I'm yet to meet many protocols where we can't integrate because of how versatile that just fundamental proof of stake system can be and apply to very many different things.
Yeah, I think like one use case I'm very excited about, and you mentioned CAP, Rose, is the insurance one. I think like we're again very early on this topic, but like if you're looking at insurance in TradFi, I think it's like 8 trillion, so it's huge. I mean, like today, restaking is 20 billion, and I think we have like maybe $500 million, which is really at stake or at risk. So it's really, really tiny. And with these new DeFi protocols that are like CAP, going to use like insurance mechanism built in within the restaking framework to protect against like DPEG, to protect against liquidation, I mean, bad debt within lending markets and things like that, it's going to grow much, much bigger. And I think like maybe if we have like this same panel in a year or 2 years, you're asking the same question, maybe the restaking landscape will be vastly different.
Yeah, so like for StakeStone, we always think about staking as a way to cover like capital cost, like the yield opportunity cost. But we always focused on like the liquidity ticker itself, like the LP token from the restaked Stone Ethereum. So we built a lot of like DeFi scenarios around that, and which is why we like kicked off the bear chain like pre-deposit vault, and then had like Stone Ethereum on bear chain. So like the underlying is always like staking yield, restaking yield, but then like the Stone Ethereum ticker itself that's sitting on bear chain, and then the vault, we also issue like an LP token for the vault, which is then like being leveraged on ETH mainnet. And I think that's like staking and restaking is just the infra that drives, that covers for all the yield opportunities. And then what really like DeFi protocols that should be focusing on is driving the liquidity layer, and then like empowering that for different DeFi scenarios. I think that's what's important.
I just wanted to briefly touch on what Etienne mentioned, and like a lot of people think that slashing is just the taking away of capital, right? The burning of funds, because that's historically what it has been used for on L1s. But on the insurance case, you can, by slashing capital, yes, you are taking capital away from an entity, but you can use that same capital to reimburse users. And so that is why the insurance use case is very, very powerful. And on Symbiotic, you can structure your slashing however you want. It's like an infinite framework for structuring how you want to slash your network depending on your needs. And so that moving away from the rigid mindset of slash funds are burned and lost to actually slash funds can be used to do X, Y, and Z is a big unlock for more use cases.
Yeah, so I guess we all agree, like for our layer ones, it's kind of like liquidity is way more important than like shared security. But then for like, for everything else, like kind of decentralizing the entire like stack, let's say we go into AI agents and everything like this can all be secured by economic security, right? Through protocols like Symbiotic and so on. And maybe there's like way more use cases to be explored beyond like, just L1 economic security. Yeah. I want to touch a little bit on like the future of proof of stake itself as well. Looking at like the innovations that we have in ZK. I was speaking with like the Celestia founder recently, and they launched a thing where you can basically go from like one L2 to another L2, just doing like a ZK proof. So you don't even like settle on the L1 anymore. And that's maybe like the actual trend, right? We just talked about like, okay, economic security like is not that of a great use case for restaking, but maybe it's not even needed, right? In the long term, like when we can make proof stake entirely redundant, just using ZK proofs. So I'm curious, what do you guys think about that?
So one of my co-founders, Sam Hart, he was part of the working group at Celestia that was applying ZK to Celestia. He's now with us, figuring out how we can apply ZK to interoperability. When most people hear zero knowledge, they think about privacy, and ZK is great for that. An underappreciated thing about ZK is that it's also fantastic for interoperability. Like if you want an action to happen across multiple chains, you don't want to have to be an expert in Solidity and in Rust and in Move and in all these different languages. What you could do is just have a single control plane that compiles to a set of code that can then be executed on co-processors on multiple chains. So that's one way that this can apply. And as you're restaking, like maybe the assets are coming from EVM world, but you're restaking a chain with a different language. This can all apply.
Yeah, I never actually thought of ZK as a competitor to proof of stake. Maybe that's just as being naive, but like for me, it's very much a complementary technology at the moment. To your point, like the privacy side, the scalability side, like the ZK tech is fantastic and can really help the ecosystem. Like if you think about, at the end of the day, though, you still need to have data posted on chain. There needs to be, you can have ZK proofs doing a whole bunch of different stuff, but if you want data on chain, that off-chain data needs to be put on chain. And there's, in my mind, there still needs to be some actor to do that. And coming back to what I said before, where there is a role that needs to be undertaken, that role should be done by a decentralized node operator set. So even if you do have a world where ZK is maximally used, I still think you need to have that on-chain settlement done in a way that is economically secured through some form of consensus via proof of stake.
Yeah, I mean, like I don't have a hard opinion on that, but like my point is that like it's not because you have a ZK system that you don't need proof of stake. You still need to decentralize the network of provers, for instance. You still need to figure out a way to find which prover is going to be selected by the network to provide the proof to the network. You still need to make sure that the proof is going to be sent in a timely manner. If not, maybe they're going to get slashed. So proof of stake is useful. There is no better solution for this specific use case today. But I agree, in some cases, ZK is kind of eating a little bit the lunch of proof of stake, but it's not over for proof of stake.
Yeah, it was a question about POS and ZK, like whether they, I don't see them as, I think they're complementing, each other, yeah.
Yeah. No, I think so too. I mean, obviously, there's to be explored where like ZK can like make proof stake more efficient as well. I think it's interesting. And then I want to touch a little bit about obviously like the BTC staking has been a huge narrative as well. Over the last year, and I mean, it's actually fascinating to see like how the narrative around Bitcoin changed as well. And what I heard a lot is also like the narrative that Bitcoin is potentially moving at some point in the next 20 years to proof of stake. And I'll be keen what you think. Like if you talk about the future of staking, this is obviously quite relevant. And I would be keen to have your thoughts on that.
So, can it happen technically? Yes. Will it happen is a very different question. And the chances are like way below 1% right now. Like the Bitcoin network itself and So the argument for a lot of the Bitcoin maxis argue for not moving to proof of stake is that it could be more centralizing. I don't necessarily agree with that argument. Like, if you look at a high level, Ethereum network is more decentralized than Bitcoin. I spoke to a Bitcoin L2 the other day, and they told me they have 70% of the Bitcoin hash rate on their cap table. That should be impossible. It's crazy. So I don't necessarily. I'm obviously of the proof of stake side, so I'm for POS over proof of work. But for Bitcoin, I just don't see it happening, and I don't actually think it needs to. What is more likely to happen is, unless there is some major pickup in network activity. As Bitcoin matures and the more and more halvings occur, it's more likely that the network needs to move towards more like a perpetual, like a year annual inflation model to continue to reward miners in order to make sure that it has suitable economic security. So I think that's more likely, like retaining the proof of work mechanism, but altering the rewards system of the network rather than a migration to proof of stake.
Yeah, I would agree on. I mean, to be honest, like it's a tough question. I'm also on the stake side, proof of stake side, but like generally speaking, I think that proof of work is a good concept to bootstrap a network. But now we are at a stage where Bitcoin is actually mature. And one of the things that kind of worry me with the proof of work is the fact that a network that is supposed to be self-sustainable is actually depending on something completely external, which is the price of energy, the market of energy, the innovation within the energy market. And so I love the concept of proof of stake because at the end of the day, it's self-sustainable. Like everything is managed in-house, and this way you can just like live a long life without any like issues arising from some external factor that you don't control.
I think Bitcoin staking itself, I mean, it's not a real concept, right? Like, a lot of people don't. Yeah, no one really, especially in APAC region, no one really likes to give up ownership or custody of their own Bitcoin, and that's why we like stick in the ETH like vertical, because there's like smart contract capabilities, and you can actually use smart contract to stake ETH. But Bitcoin, I don't really see a point for it to switch to like a POS network. And there's a lot of like miners in APAC, and they do want to do DeFi activities using their Bitcoin, or they do want to use Bitcoin to secure certain networks. But are they willing to give up ownership of their Bitcoin to do so? No. And if Bitcoin is to change from POW to POS, who is it really benefiting? Like, Bitcoin's there for a reason, like proof of work and like store of value, and really like changing it to like proof of stake. I don't really see a benefit.
It's not happening. Next.
Yeah, I mean, like personally, I think it can actually happen because at some point, like the fees are going to run out in Bitcoin, and then like something has to happen. So maybe like an annual inflation, but also I think kind of giving up on the holy grail of the 21 million. I think that's even harder than giving up on the proof of work, for example. So I think, yeah.
Yeah, I mean, who's in control of this right now? It's the miners. Where have they invested millions of dollars? It's in their infrastructure for proof of work. So there's something that has to be seriously major happen and change for them to move away from proof of work. So I actually think it's more likely, just counter argument, I think it's more likely they would change the inflation rate and stick to proof of work for that simple reason alone than change it to POS.
Yeah. Yeah, but it's not the miners making the decision and like just by themselves, right? Obviously, like Bitcoin is fairly decentralized, where everyone is making decisions. As a decentralized system. But maybe, we have to like wrap up soon in like 4 minutes. I think I want to like touch on one more question before we wrap it up. It's like on the general like abstraction of staking. I think that's also something where we've seen like a lot of structured products come up in the last year around staking, and like generally, I guess a lot of like institutions want to enter the space as well, but like who's actually going to surface with staking, like do you think, like in the next few years? Like, is everything going to be entirely abstracted away and no one like even knows anymore like how they generate yield, or like where the yield is coming from? Does it even matter to the user or like to the investors? Or like, how do you think about the abstraction of staking and like the kind of the end user relationship with staking?
I can jump on this one if you want. I mean, I'm going to shield a little bit Mellow, but like we have this like curated model where anyone can build a structured product with any kind of bespoke mechanism behind it. And I think at the end of the day, it depends on the customer. Like if you're looking at like sophisticated actors, maybe they will, I mean, most likely they will know that they're buying a liquidity staking token or an LST or whatever. But if you're looking at retail users that get access to this kind of product through like wallets, maybe they won't know, and maybe Like it will be more advanced and structured products that we, by the way, are enabling on the Mellow side, which allow the rebalancing between staking, restaking on Symbiotic, restaking on Eigenlayer, then looping on Aave and delta neutral strategies. I think, yeah, it's just a question of product market fit, and it will depend on the distribution channel in the end.
Yeah, I'm all for like staking abstraction. Like for StakeStone, our underlying we delegate to like Eigenlayer, Symbiotic, through Mellow, Vault, and all that. And I think yes, you guys are B2B, but you can also have like a retail facing, but all the volume would come through people like a DeFi protocol, like a LSTLRT that's operating, or the retail, or like a wallet you mentioned. So it's like a really good, easy like gateway if protocols like us can abstract all that away and then just cover the base like risk-free yield for the users, and then we can focus on operating the liquidity layer itself. You know, it's not easy onboarding as a collateral to like Aave or like Morphle, and you know, there's a lot of involved, like a lot of DeFi strategy involved in running Stone Ethereum itself. So I think we can focus on that, and then also onboarding like new users to like retail. Like we're launching a payments product that's involving using Stone Ethereum as a payment asset. So yeah, that can help us onboard more retail, and then the underlying is always going to be like, you know, working with the protocols like you guys and getting the best risk-free yield for our users.
Yeah, I think it depends on what your blockchain, what you're trying to do. You know, if you want your chain to just do the bidding of an AI and there's no DeFi and like you just want a lot of security behind that, like yeah, you're gonna be all in on staking. You're gonna care a lot about how those operators, how they operate, all that. If you're doing any sort of DeFi thing, though, I think you're going to care a lot about capital efficiency, and so I think you're going to want to abstract the liquid staking part of it the staking part of it as far away as possible, so that as much of that capital is actually being used in the economy and not just unproductively being stuck in one place. So models like proof of liquidity are going to be more common. I think that protocols are going to get much more sophisticated when it comes to their monetary policy. Like we're sort of used to Bitcoin, like, oh, there's a halving every 4 years, and ETH has their deflationary policy, right? I think there are much more creative things that can be done where protocols are deploying their protocol and liquidity into their own ecosystem, lending it to other ecosystems, or just lending it, and we're going to get much more capital efficient.
So yeah, just quick. I mean, yeah. Kind of echoing all the points made. I think wallets are the key piece here. Like in my mind, like wallets are your traditional bank accounts. They're a store of they safely store your assets, and they also provide you an interest rate on those assets. And I think, you know, most people don't even think about where the interest rate from their bank account comes from. And the analogy for the Web3 space is that yield is going to come from a lot of staking often. So yeah, I do see a world where most dormant assets in wallets are fundamentally staked, and with that yield or deployed in Aave or what have you, that's already happening a lot in the space, but I expect that to continue. So yeah, to your point, there will be abstraction away from the staking layer. People will be staking without really thinking about it. They'll just be enjoying some yield of assets sat in the wallet.
Nice. Yeah, that sounds great. I mean, in the end, probably everyone is going to stake and earn some yield through staking. Maybe they don't even know it, but they will. So yeah, I think that's a great future. Yeah, thanks a lot for you guys. Great answers. I think we learned a lot about the future of staking around liquidity and like how to make economic security more efficient and so on. So yeah, thanks a lot. Thanks for having us, and looking forward to the next panel.